All right, everybody, welcome back. You know why you're here, right? We're diving deep into Bitcoin again. And this week, well, let's just say it's been a wild ride.
It has.
We've got a ton of pasted text to dig into, everything from, well, the price is always bouncing around, right?
Right.
But also, like, the whole economic picture is, well, it's kind of shaky right now.
Definitely a lot of uncertainty out there.
And on top of all that, we've got these big players, and institutions and stuff making some moves that, well, let's just say they're turning some heads.
It's going to be interesting to break it all down.
Yeah, so let's jump right in. Okay, first off, Bitcoin took a pretty big dip this week. I mean, we're talking below $80,000, which is, that gets people's attention.
Definitely a significant drop.
But then, almost as quickly as it fell, it bounced back up. I mean, it's up around, what, like 84,000 now?
Yeah, climbed back up pretty rapidly. Got to give it that.
And a lot of that has to do with, well, some pretty big investors jumping in.
It really does highlight Bitcoin's volatility, which can be intimidating for some people, but this is actually kind of a pattern we've seen before, historically speaking. You get these sudden dips, and then these big players come in, they buy up a bunch of Bitcoin, and boom, back up it goes.
So you're thinking this is maybe just a short-term blip then?
It's possible, yeah.
Yeah.
Not necessarily a sign of a larger downtrend, at least not yet.
Okay. But, Bitcoin doesn't exist in a vacuum.
Not at all.
I mean, there's a lot of talk about this, economic uncertainty we keep hearing about.
Right.
And the Federal Reserve, the Fed, they're doing their thing. They're holding interest rates steady for the moment, at least. But there are these hints that they might start changing how they're managing, what is it, their balance sheet.
The balance sheet, yeah.
I mean, what does that even mean, and why should anyone care?
Well, you can think of the Fed's balance sheet like this big pool of money, right? And by buying or selling assets, they can control how much money's in that pool, which then affects how easily banks can lend money. And that kind of trickles down and it affects the whole economy, really.
So, like, if they shrink their balance sheet, it could slow things down.
Exactly. Borrowing could get more expensive. Businesses might hesitate to invest. And that uncertainty can make investors nervous.
And nervous investors, well, they don't tend to gamble on Bitcoin.
No, they tend to get a little more risk averse, right? They might move away from assets like Bitcoin, which are seen as more volatile, and go park their money in something considered safer, like bonds or gold.
Right. And then on top of all that, there are these trade war rumblings, which, well, those don't exactly inspire confidence either.
Definitely not. Trade wars create so much uncertainty, right? And uncertainty is like the enemy of investment. It makes people nervous and hesitant to put their money into anything, especially something like Bitcoin, which is already, known for its volatility.
Which actually might explain why we've seen over $5 billion flow out of Bitcoin ETFs recently. That's a lot of money moving out.
It is significant, especially when you consider that the Trump administration has generally been, pretty pro-crypto.
Yeah, you'd think that would be good for Bitcoin, right?
You would, but this really shows how powerful the overall economic climate is. Even with political support, if investors are worried about the big picture, well, that can override everything else.
So ETFs, just for anyone who doesn't know, are basically it's like you're buying a basket of Bitcoin on the stock market. So it's a way to invest in Bitcoin without actually holding the digital currency yourself.
Right, exactly.
But here's something I thought was really interesting, because amidst all this, all this uncertainty and people pulling money out, you've got this company, Strategy, which I guess used to be called MicroStrategy, right?
Yeah, they rebranded.
And they just bought a ton of Bitcoin, like over $10 million worth. That seems kind of crazy right now, doesn't it?
It definitely seems to go against the grain. But some analysts see this as a publicity move.
Oh, interesting.
But, personally, I think it reflects a belief in Bitcoin's future. They're essentially betting that Bitcoin's going to weather this economic storm, all this uncertainty, and come out stronger on the other side.
Yeah, it's a bold move, that's for sure.
It is.
And then on top of that, we've got some technical signals that are suggesting things might actually be turning around. Now, obviously, this is not financial advice.
No, not at all.
We're just looking at, some of the data here. And there's this pattern called a bullish divergence, where basically the price of Bitcoin is down, but this thing called the Relative Strength Index, or RSI, which measures momentum, is actually up. So it's kind of like these two things are going in opposite directions.
Right, and that can sometimes be a signal that the momentum is shifting. Doesn't mean it's a guaranteed price increase or anything.
Right, of course.
But it does suggest that, maybe that selling pressure we've been seeing might be starting to weaken, which could be a sign that things are about to turn around.
So basically, Bitcoin is as volatile as ever, right?
Always.
We've got all this economic uncertainty swirling around.
Yeah.
But there are these signs of, some pretty big players showing confidence, putting their money where their mouth is.
And some potentially positive technical indicators as well.
So the big question is this going to be enough to push Bitcoin past that $100,000 mark? I mean, nobody knows for sure,
Nobody has a crystal ball.
but it's definitely something to think about, right? So keep learning, stay curious, and we'll be back next week to dive into whatever craziness the Bitcoin world throws at us next.
Sounds good to me.
All right, see you then.